Hello and welcome to the Weekly Forex Outlook at XM.com. Investors are eagerly awaiting next week's Fed decision on Wednesday. In addition, both the Bank of England and the Bank of Japan will announce their decisions on Thursday and Friday. How might these policy moves affect the respective currencies and the markets? I'm Maria Bashardis, and joining me to discuss all this is Senior Investment Analyst Haralambos Bisuros. So Haralambos, a few weeks ago on August 23rd, Powell's speech at Jackson Hole indicated that the Fed will not tolerate further weakness in the labor market. What data has come out since then, and how might it impact the Fed's decision on Wednesday and the US dollar?
Hello, Maria. Yes, indeed, Powell emphasized the importance of the labor market, with market participants adding to their rate cut bets on every sign of softness. Even last week's NFP report for August was not as encouraging as expected, prompting traders to pencil in a 30% chance for a 50 basis points rate cut at next week's gathering. That percentage came down to around 15% after the CPI data for August revealed that underlying inflation remained elevated, well above the Fed's objective of 2%, but the probability climbed back to 45% after media reports from the Financial Times and the Wall Street Journal said that next week's decision would be a close call. Having said all that, though, with the Atlanta Fed GDP Now model projecting a solid 2.5% growth rate for the third quarter, I believe that there is no concrete reason for policymakers to start this easing cycle with an aggressive move. I believe that a quarter point cut may be a more sensible move. Now, if this is the case, the dollar could gain, as those expecting a bigger reduction may get disappointed. But whether the currency could hold on to its gains may depend on the updated dot plot and Powell's remarks about the bank's future plans. Now, if the dot plot and Powell suggest fewer basis points worth of reductions this year than the 115 currently expected by the market, the dollar could gain more. Now, with regards to equities and Wall Street, confidence that the world's largest economy is not headed for a recession may keep risk appetite elevated, even if this means fewer than expected rate cuts.
Moving over to the UK now, the Bank of England cut interest rates by 25 basis points at its latest decision. What might we see this time when the bank meets on Thursday? Do you think policymakers will keep their hands off the rate cut button?
Yes, I believe that the Bank of England will stand pat. And actually, this is what the majority of investors believe as well. There is only a 20% chance for a quarter point cut at this meeting. Bank of England policymakers have been signaling that they are in no rush to cut again, and the recent data have been corroborating that view. The PMIs beat expectations in both July and August. The labor market continued to improve. Average weekly earnings have been proving stickier than expected, and services inflation remains stubbornly high. So I think that the spotlight will fall on the bank's communication. According to the UK overnight index swaps, investors expect another 2 quarter point reductions at the November and December gatherings. So if policymakers stand pat and maintain their no rush mindset, I believe that the pound may extend its latest rebound.
Turning to Japan now. Back in July, the Bank of Japan raised interest rates by 15 basis points and has signaled that more are coming. Do you think we'll see another hike when policymakers meet on Friday? And what reaction are we expecting to see in the yen?
No, I don't believe that the Bank of Japan will hike interest rates next week. Neither does the market. Yes, policymakers have been signaling that more hikes are coming, but they have also been adding that the pace of future hikes will be slow. So investors will be more eager to find out when will the next increase come. Traders are now assigning around an 85% chance for another 10 basis points hike before the end of the year, and anything corroborating that we may get another hike by December could allow the yen to rally more, even if we don't get the hike at this gathering. The yen could extend its rally as the further narrowing of the yield spread between US and Japanese yields will prompt more traders to abandon the previously overcrowded carry trade.
And finally, is there anything else coming up that traders should look out for?
Yes, on Tuesday, Canada is also releasing its CPI inflation data for August. At last week's meeting, the Bank of Canada cut rates for the third time in a row, opening the door to bigger cuts if the economy slows more sharply ahead. On Wednesday, the Bank of Canada summary of deliberations may provide some clarity on that front, but further cooling in consumer prices the day before could very well encourage market participants to add to their rate cut bets. The US retail sales are coming out on Tuesday. On Wednesday, we get the UK inflation numbers for August, just the day before the Bank of England decision, while in Australia, the employment report for August is due out on Thursday.
Harlambus, thanks so much. This was the Weekly Forex Outlook here at XM.com.